It's great as usual to be back in Cypher, and it's even more exciting to have such a eclectic set of people to chat with and discuss some very, very interesting ideas, topics, questions that we all live every day. The premise of our panel discussion today is, if you look at analytics, machine learning, etc., whichever name we give it, a lot of this discussion is always in the context of really large-sized organization. Even if you look at within the Indian context, we speak about ICICI Bank, HDFC Bank, HDFC Standard Life, Flipkart, etc. However, today, thanks to the cloud and thanks to the open source revolution, machine learning, AI, and analytics has become a lot more democratized than it was maybe 5, 10, or 15 years back. At the same time, competition is becoming extremely intense. There was a report from Dell about 6 months back, and that report had a title which said, "Blessed are the mid-market companies, for they shall scale big data." And the reason for the title was, as compared to larger organizations, mid-market organizations are a lot more nimble, and they are possibly in the right position to get the maximum benefit out of big data. So with that context, we'll start with Prakash. So Prakash, you head digital strategy innovation in FinCare, and FinCare is one of the newest banks in the country. What do you think for a mid-sized bank, or even maybe a small bank like FinCare, what are the machine learning and AI opportunities which are typical of a mid-sized companies as opposed to a large organization?
Sure. I think a little bit of context before I come on to that. The way we look at a mid-sized bank or a new bank, it's a child. That's how we are 1 year old. And what we've actually looked at the whole AI and the ML space, I think it's a bit about the way you structure your whole bank from a DNA perspective. There's great technology out there, but I think what's missing is the DNA, typically in the banking system. And the way we've always started out is to say, look, we were an MFI lending to the base of the pyramid. So when we set ourselves up to become a bank, we said, look, we could be a conventional bank focused at the base of the pyramid. That's one statement of purpose. The second statement of purpose is, it's great to be a digital bank. So you could be a digital bank. And the third, which is probably what we're setting ourselves to be, is actually a fintech with a banking license. So this is how we at FinCare live and breathe. So once you have that context saying, look, I'm actually a fintech and I do have a banking license. Now your whole approach to things completely changes. So with this sort of background, what are the challenges, opportunities, and the way we are designed is, first thing that we do is we do 90% in-house. So we say, look, like Amazon or Netflix is not going to hire a vendor to do X things. Yes, there is the regular core banking, core accounting, let me say the less fun bits, and we sort of systems of records. We do have vendors for that, but all the other parts, we sort of do everything in-house. Now, if you don't have the right culture, you will never get into the ML AI space. The second thing, which we sort of, so we've got the team, we start building teams around it. The second thing is the way we see banking or financial services in the next 5-10 years. I typically tell a lot of my friends, and these are very critical in the way we are designed today. I tell a lot of my friends, I have a 4-year-old, and I say, you know what, he loves cars, but he may never get a driving license. Because probably in the next 14 years, it may be illegal for a guy to sit behind the wheel, maybe in some suburban road. That actually means vehicle insurance will no longer exist. right? I don't know what's going to happen to health insurance because you're going to be continuously tracked and this whole underwriting logic will change. That's all financial services. I keep telling a lot of my friends, take 5 crores, 10 crores health insurance, but don't take life insurance because you will have replaceable organs in 15 years, right? You just need lots of cover to make sure I can buy a new lung, I can buy a new leg. This is what will happen. So look how financial services will change, right? You need 5 crores of health insurance, not life insurance. You could live like Robin Williams in Bicentennial Man for 200 years. Now, if you've got these lines of thinking in your way you build your organization, then you do realize that, look, my entire underwriting needs to change. What today an urban consumer does on home loans, goes and shops around, that's what my microfinance customer. So we're disrupting. The second principle is we are disrupting ourselves. The second principle. With these two, what we have now done is we are pretty much aggregating data across sources. You can pick it up, SMS, phone scrapping, credit algorithm-based lending. We're already getting on very soon on the GST platform to underwrite customers. So a lot of our lending side of the business is moving towards flow-based lending. We are in arsenal state. The second, so that's the AI bit because it's all algorithms where we are doing that. The second thing on our, what I would call liability side, I think we're trying to overall say that, if you can reduce your OPEX, you should be able to pass on the true yield to the consumer. So effectively, you are going to some form of a peer-to-peer. That's why we offer the best yields. So it's not easy to offer a 9% on a fixed deposit, 9.5% to seniors, and 7%, which is what you get on FDs, but you're passing that to the liability consumer. Now, the minute you spread this too, you become very viable. So this is the premise, and on both sides, we've actually used, we can get into stuff like TensorFlow, which we're using for SMS scrapping and email scrapping, but but I think if you get the design right, then for a mid-size enterprise, you're thinking of a very different league. So that's how I see the mid-size. It's not your size today, but how big you could be.
Absolutely. Thank you, Prakash. One thing that you said I really liked. We can look at a mid-sized company as a fintech plus a bank with a license. You can look at a mid-sized healthcare company as a health tech with a big hospital chain. You can look at a mid-sized retail company with a retail tech with a lot of shops, physical shops. So that really is a very interesting way of looking at mid-sized companies. Thank you, Prakash. Coming to Ajay. So Ajay is one person who is uniquely both the head of operations and head of technology for Home First Finance. So Home First Finance is a affordable mortgage company, and he started that organization. He and a few others, founding members, started the organization, and now it's a decently big-sized financing NBFC, and he has from day one led both operations and technology. So Ajay, I'd come to you and ask you again, pretty much in the same vein, what are some of the areas that you think where machine learning or AI, etc., is important for a company of this size, where you have giants like HDFC as well?
So just to give you a bit of a background, Home First Finance Company is an affordable housing finance company, which finances home loans from close to about 1-2 lakhs to about 20 lakh rupees for customers, profiling from a self-employed small restaurant guy, a chai wala, or a driver, and so on and so forth. This is a segment which sort of was always existent in India. However, the large organizations, large housing finance companies would go after all the salaried creamy layer, and they would not be going after some of these customers. And sometime in 2010, we realized there's a huge opportunity at the bottom of the base of the pyramid, and we can tap some of these customers. However, it required a lot of differentiation from some of these large companies, because you are taking a higher amount of risk, and you need to price it properly, because you cannot give a loan of 8.5% to these kind of customers. You need to price it and make sure that some of this risk is taken care of. So what we started with was a very good service that could be given to these kind of customers. They were welcome to our branches, because prior to we opening up, these customers were not even welcome to large banks and large financial institutions. Apart from that, one of the things that worked for us, and it's still working, and people are trying to find out how we do it best, is to get the best turnarounds. And this helped us, turning around loans for drivers and maids in say 24 to 48 hours, and that was a big success. So coming back to the opportunities and how we are using technology is, first and foremost, we started with a very strong and robust CRM, which had all the data from the customer coming in at one place, and we had all the underwriters sitting across doing underwriting real time, online basis. So talking about opportunities, we have opportunity right from customer acquisition, underwriting, churn of customers, so forth, so on and so forth. There is not even a single area where we cannot think of applying ML and AI, and we are working on a lot of these areas and trying to see what we can do for this base of pyramid, because the opportunity is huge.
Dhruv leads analytics for ACT. ACT is a company which most of us in Bangalore will definitely know of. Most of our internets possibly are ACT internet. And interestingly, within ACT, Dhruv is almost like a single member analytics team. While in a large organization, we'll have a data engineering team, a data science team, a business analysis team, and possibly an MIS team. Dhruv pretty much rolls all of that within himself. And there are a few very interesting usage of machine learning that he has been able to harness within ACT and revolutionize ACT. So Dhruv, can you talk a little bit from a telecom context, what some of the areas of opportunities that you see within ACT?
Sure. So first out, ACT is, of course, in the services space, and whatever I'll say right now is more in the personal context, not really the views of ACT. Having said that, it will be more relevant because it would apply to almost any service company. Being in the telecom space, ACT does deal with a lot of data, right? Because at every point of time, there are some millions of users using the internet with some new data coming into your systems. So when you look at it from the AI or ML perspective, what AI and ML are actually doing, it's artificial intelligence, just as exactly what those words say. It's like you have a computer, so you can scale it infinitely. Intelligence is you're trying to replicate the human. So you can look into your data in multiple ways. So how that is helping us, they really, or not just us, I would say for any service company, there are 3 key points I would say. Point number 1, the very fact you can see all your data simultaneously in depth, it gives you better customer insight. So you can use that analytics to probably predict better as to what exactly that particular customer wants and design your products for him. Point number 2, it helps you understand within your organization how the efficiency of each person is and where are your gaps, maybe in the form of a time motion or in terms of a process. Because you see probably a particular function or a particular process is getting stuck at that point. So it helps you identify those points, and it helps you make the process more efficient by either automating it through the same AI or by building another process. And the last and the most important piece, whatever we speak of, whether it be AI, ML, or anything, all these are enablers, right? So all these give better insight to the people sitting on top to take the decisions. So they enable decision making. So if you ask me, the best part of AI and ML is that it tells the guy on top that this is what your organization looks like, this is the picture, and you can take decisions on that. And really with all this, any organization is in a better position to really go forward because you're giving better service to your customers and you're taking better decisions. Rather, you're taking better decisions to give better service to your customers with a more efficient system. So that's what I feel it is.
Thanks, Dhruv. Tushita, on the other side, Tushita is slightly different from the other 3 gentlemen in the sense that when we look at analytics, a lot of analytics, as Prakash mentioned, is done in-house within organizations. But a number of analytics service providers and consultants do work with companies in helping them traverse that path. So Tushita sits on that side of the table. compared to Dhruv or Ajay or Prakash, who sits on the consumer side of analytics. So she is the creator of analytics for these guys. So Tushita works with large, so she heads custom analytics for Equifax, one of the bureaus in India. And she earlier had worked with HDFC Bank. And she works both with large lenders like the HDFC banks and the ICICI banks, and also with smaller lenders for doing almost the same thing. And she interacts with both of these two sets of business managers on a daily basis and sees what are the differences in approach to analytics for a mid-sized organization versus a large organization. So Tushita, what is your view on this?
Thank you, Hindol. So yes, like Hindol said, that we sit on the other side. Just to step back a little and give you an overview of what we do at Equifax Data and Analytics. Most of you within the financial domain would understand Equifax to be only a credit bureau. That is not the case. Worldwide, we have our credit bureau services, and at the same time, we are innovators when it comes to data and analytics. There's a lot that we have done in the space of IPs. When it comes to neural networks, we have an IP called a neurodecision technique, which caters the explanatory side of a machine learning algorithm. Right, so there's constant innovation when it comes to data and analytics, and yes, like Hindol mentioned, that we deal with the large conglomerates, we deal with the middle-sized ones, and we deal with the small ones who are just stepping up foot in the worldwide or the Indian platform. Essentially, my team is also involved in globally, analyzing what helps people, right? Why I say that, there is a very simple context to it. Like, right, to give you an example, there was a fintech which was started somewhere in Luxembourg, and they serviced a section of farmers in South Africa, right? What was the alternate data that they used? They didn't have any data of their own, right? So the data that they used was utility payments. The data that they used was scraping mobiles for spending patterns, and what they basically used in terms of geospatial, existence of the people. What they added value through is the social media data, right? They managed to keep the NPAs less than 7%, which is a great feat. Nobody really tapped that market of South Africa with a less than 7%, not even being there, right? It's a great feat, and we learn from these examples every single day. So when I say learn, that brings us to a question of why, right? So the large conglomerates who are there, definitely they have established analytics teams. They have been there for a while. They are understanding and scraping data, which is internal data, as well as the data that they can get hands-on. When I say hands-on, in India, we have quite an amount of restrictions in terms of data. So alternate data is a huge feat for any company to attain, right? So internal data coupled with bureau data is something which is driving value, right? Data in terms of, Hindol, please stop me if I extend my time, right? So data, when it comes to data, there is alternate data in terms of utility payments, in terms of social media, right? Most of us, we talk about text and voice, right? There's a lot of visual data which is available, right? How to bring that visual text and voice data, right? Merge it with utility payment data, merge it with bureau data, and merge it with the banks or the NBFCs or the telecoms internal data to drive the actual AI and ML perspective is what my team does as a day in and day out perspective. Okay, so there are challenges which are galore, opportunity because data is sparse, unstructured, way that you structure it, how you use ML techniques like NLP and cognitive understanding is something which is an open platform, right? You make sense of the unstructured data, you use ML to drive better decision-making power. It does not matter whether it comes to marketing or it comes to collections or it comes to credit risk in terms of a financial services space.
Thank you, thank you. So I think we will move into the other and most important question that I had on for mid-market companies, which is around the challenges that they face. Now, analytics adoption itself is a difficult journey for any organization, irrespective of its size. But possibly there are some challenges which are more difficult or more critical for mid-sized companies. For instance, people. Now, we all know that recruiting the right people is possibly the most important first step for driving any analytics kind of transformation. Now, it may be easier for a large bank or for a new fintech startup to get the best talent in machine learning, technology, data science, etc. But for more traditional mid-sized companies, it may be a lot less cool to attract talent. So that could be one. Budget, for example, budget possibly may be a constraint because many of these initiatives does require significant amount of investment and upfront investment. Risk appetite could be a challenge because, for example, if one project fails in a large manufacturing company like a Tata Steel, possibly not much happens. I mean, it doesn't have so much of impact. But if a key initiative fails in a mid-sized companies, maybe the repercussions, ramifications are more. So with some of these thoughts, maybe I'll start with Dhruv. What do you think are some of the challenges which are very typical of a mid-sized companies that you face every day?
So typically, a mid-sized companies are those who are kind of in their growth trajectory, and they're constantly evolving, right? So the types of data, or rather the quantum of data, the data is very varied, and the data may be not vary just in terms of type, but even over time, the systems may have changed. They may have data across different systems. So the first and foremost challenge is about getting all the data into a form that you can actually digest it. Because the AI ML really sits on the fact that it has that vast amount of data, which means it can speak to everything, and your systems don't speak to everything, right? The second part of evolution is that when you're evolving, more important than anything else, it's the data part is the very transactional part of the organization. The main part of the organization are the processes and the people, right? So understanding, in order to make any change or to make any useful impact, you need to know the processes and the people. You need to understand the business inside out. So you need a champion out there. So the biggest challenge which you really face in these kind of setups is the people who've been running it. Who is it who's going to actually champion it? Now when he champions it, he has to have a clearly defined objective. When you set up analytics from scratch, very often you do not know what you're looking at, what is the value add you bring to the table in which vertical. So you need to now figure out, I'm going to define, this is the area I'm going to impact. You of course can't put a deliverable if that company is going in that direction. But you need to have a very clearly laid out structure, and it has to be top-down driven. Because the biggest issue which now arises at the next stage is this company, which is adopting analytics, has not been data-driven, which is why they're adopting analytics. So in order to be data-driven, it's a behavior change. And for a behavior change, the minute you're talking of people, it has to be top-down. So the next challenge which you hit is about how do you get adoption from the top level in order to drive behavior. Just because the top person is involved doesn't mean behaviors change. Because people at the bottom layer will continue using their local MIS or the local insights. So you could have the best churn model in the world, saying these are the customers who will churn, and then month on month you say 90% prediction from my model. But what happened? Churn did not change because the guy at the bottom never used your data, right? So now it comes down to changing the behavior and adopting that data. So if I were to just concise it, it is getting your data in the right sort, getting that direction as a team, getting it top down, and getting the adoption done. So one thing I missed out in this is in order to get that adoption done or to drive everything, a very key element is your IT systems. So the involvement of the IT team. The IT department plays a very major role. So typically when you hear people, so probably in the bigger organizations, analytics can be a separate team because everything is very structured and there are processes of hand-holding between each. But really in a mid-sized organization, where each department is trying to deliver goods as of yesterday in order to evolve to the next stage, you need a very tight coupling between analytics and IT with a top-down driven approach in order for it to go forward.
Thank you, thank you. Ajay, coming to you, maybe I get people a problem, getting the right people.
Yeah, getting the right people, because being a mid-sized company and a brand which is not as well known as the large giants, it is difficult to get people. The other challenge is, even if you get brilliant data scientists, to make them understand the business is another challenge, because this community has to come in, has to sit in, understand each and every process that your organization has, and then try and figure out what are the how the challenges can be solved according to the requirement of the business. So that is something which is a big challenge.
How are you addressing that?
So what we have done is we have gotten some of the business people to learn data science. So we every year we hold a competition. We get some of the best business guys to come up and take up the challenge of taking up data science projects, and they are finally enrolled into analytics teams. So that is how we have.
Thank you. Thank you. Prakash, coming to you, when we look at, is budget a challenge? Because for a large organization, obviously, there is more spending power. But for a mid-sized company, maybe we do not have so much of spending power. So have you ever faced that as a challenge?
Sure. Actually, I think you hit the first letter right, but I think, the way I look at this whole thing and what we've seen over the past 24 months, part of our transformation, I think the single biggest challenge has been behavior per se. And when I say behavior, it goes to all the points which Dhruv mentioned: leadership behavior, the team behavior, the operations behavior. I even think the employee behavior. So, blunt answer is that if people went, say, in 2002 and said a couple of guys are working on something which is all about faces and whatnot, and would you be in joining them? They're just going to start in 6 months. People will say, what is this? These are some nerds sitting out there. And if I was to tell you that's Facebook today, and you would be part of the first 10-member team, or people will say, oh, I missed that opportunity, right? That's behavior. So they want to see success. So that's how a data analyst will say, oh, let me go join a HDFC bank. Let me go join these big brands. But actually, what they don't realize is the next HDFC bank is somebody else in 15, 20 years. So I think that's behavior, and it goes back to behavior. So because the way you've got to arbitrage between changing the behavior and getting what you want to get, that's where budgets is coming in. Conceptually, that's pretty much. If I was to tell a guy, you know what, you'll get money for living today, but you'll be a billionaire in 15 years. I mean, that's all he needs to, right? And the reality, there's only so much he can consume. But this is the true challenge. I mean, same challenge I'm seeing across the board. If you look at leadership change itself, everybody is saying, you know what, I have an existing business done. I don't want to take up a new algorithm and put my whole firm on credit risk. I don't want a new source. I think the stakes are too high, and that's a simple problem. Just want to specify one critical thing, which I think is conceptually applying across the space. And I actually think this is, we are at that fulcrum, and this is probably relevant globally. If you saw the mid, say 1930s to 1940s, most of the world prior to that was in agriculture, right? You had something called the Green Revolution. Jobs moved out, agriculture became very productive, and you needed lesser people. And we would see in the mid 80s going to Liverpool and the UK, and you had the Industrial Revolution. Essentially, machines came and factory workers started coming. The Parels of Mumbai and all of these markets started becoming irrelevant because of machines came. I think after that, if you've seen, there's been this whole boom over the past 30 years on services. The services seems to be happening. I think ML and analytics is going to cause the service revolution, which fundamentally means in banking and financial services, my hunch is we are 80% overstaffed, the whole industry. 80% of the people actually will become irrelevant in the next 15, 20 years, right? Because most of the stuff is going to be done by programs. So in that spirit, the 20% of the people who we need are going to be the guys who's going to write that program, who's going to design it. It's like the machine manufacturer is more important than the guy who's working on the machine.
Right.
So that's a set of people. Finding them is my biggest challenge. Where do I go find that 20% of the people?
Thank you. Maybe a question to all of you, or maybe I'll ask Tushita that question is, whenever, we sit across with, say, the CEO of a mid-sized organization and talk to him about some of these initiatives. Sometimes the answer that we hear from a CEO is that I have more here and now kind of problems which I have to address today. I am a small business, I have to ensure that the business runs. That's more important than doing something, quote unquote, innovative. On the other hand, some business leaders in large corporates, they do a lot of this stuff because they are afraid of disruptions, that someone will disrupt me, let me try to innovate. So Tushita, when you speak to, say, CEOs of a small-sized NBFC or a small new bank, do you sort of sometimes get the same feedback saying that I have more problems of just running the company because it's here and now, all this innovation I can do later?
It's a very interesting question, and actually I could go on and on about it. But yes, I'll give you an entire perspective to how the market is observing AI and ML today, right? So we have the large companies, they have their established analytics, right? They've built in thousands of models on logistic regression, right? Machine learning, very new concept, they want to innovate, but at the same time, right? Innovation is key when it comes to customer experience and to marketing perspective. But when it comes to credit risk, right? To innovate or not to innovate, because there's regulatory involved. You can't take the risks of giving more than your actual GNPAs are today, right? And then you're going to add on to the entire bandwagon of your economic slowdown. So that's a challenge, right? So it's not necessary that machine learning is adding value over and above traditional business analytical models, right? They have different situations, they have different data which goes into that, and that's the reason why both sides, the infusion of the data and what you're analyzing from the data outputs are very important. To give you a very simple example, how many of y'all are bankers? Okay, very few. All right, but in banking, so you would term default, right? We'll use the term default and credit risk. So bad customer, right? There is a standard method of understanding that bad customer and hence modeling for that bad customer, right? What kind of modeling is immaterial, but modeling for predicting who is going to go bad, right? So identifying this bad customer also could be an ML problem. So why only to look for days past due? Why not, how he's chatting with a collection agent, what he's responding to in terms of complaints on the banking chatbots, right? Why not understand and predict default through that? That is something which large companies are definitely not looking at today. The focus is on infusion data, right? What other data we can use. What I see as an opportunity for the MSBs are the fact that you can learn from peer-to-peer lending, and you can partner, right? And you can use the latest technology between fintechs and NBFCs, which are being built from day one, irrespective of a traditional setup, right? Changing from a traditional to a very automated and AI-driven setup is a bigger challenge than adopting AI and ML right at the onset, knowing the challenges, knowing the limitations, knowing exactly what you have and what you want to drive. So that's an opportunity. The challenge is data.
Thank you.
Yeah.
Thank you. Another challenge that sometimes we face is, and this is a very commonsensical challenge. Say you are building a model to predict something, and that gives you 1 rupee benefit per customer. Now, a mid-sized company had 50,000 customer. So by definition, your benefit is 50,000 rupees. And ICICI Bank has 1 million customer. By definition, their benefit is 1 million rupees. But the technological wherewithal, the people wherewithal for building the model is same. So the ROI for a mid-sized company is low.
I just want to add to that, right, which we've been discussing. So workforce is a very, very primary and a critical thing, right? Everybody in the world is grasping to solve that problem, and in India it's a higher problem, right? We are having a lot of data scientists, but their understanding of business is minimal, right? We have a lot of business-related people and their understanding of data science. So that's where companies like us who are servicing through analytics, who are trying to create the new algorithms which are specific to the Indian continent and which is specific to a MSB or a small caps problem statement, right, comes into play. That's our bread and butter.
No, just on this 2 points, which you talked about, the CEO's problem,
Right.
and this particular one, it just goes back to this, I work very closely with our CEO, and the typical challenges, I have a problem today, the liquidity is impacted, this is impacted. I think disruptions keep happening. How many people can say demonetization didn't cause a disruption? Did you plan for it? No. GST was not a disruption. What's happening in the liquidity markets? How many people planned for it? So they actually keep happening. So the other way of looking at this is to, all that CEOs technically need to do is commit money, keep it aside, and say, these are the nerd group guys, let them go figure out some things, right? Anyway, and make sure there are enough disruptions which are keeping him busy. That's the other way of looking at it. It's the other way. And on this particular thing where you did say that, the cost per unit, per economics, I actually think there's a problem of pricing. For too long, in the country that we've been around, we've been pricing this for Western markets. We've been pricing ourselves in dollar rates and whatnot. And this arbitrage has been sort of existing. So in some sense, when they look at a local client or a small client, they try to do the same amount of pricing. But that's not the real price of the labor itself. I mean, that is disappearing. And that's actually disappearing. That's why engineers, a fresher who joined Infosys 14 years back joined at 3 lakhs, and today he joins at 3 lakhs, right? So the absolute value of money has changed, but that's not changed. So in that spirit, if you ask me, the more and more, I think it becomes affordable if you have the mindset to take that pain onto yourself and hire these guys. If the day you say, I want a vendor, believe me, you're looking at 20x higher prices. Now that's the difference what ICICI will do. They have too much at stake. They will actually take people at 20x the price because they bluntly put, there's a lot of cover my ass attitude there.
So Hindol,
right? You can take the risk.
Hindol, I would actually like to add that question which you asked, right? That 1 rupee, if you can show an increment, it's 50,000 customers, 50,000 rupees. So I feel this is exactly the way analytics needs. This is the wrong way of perceiving analytics. This was very transactional. If someone can show me that 1 rupee is the benefit I have given you because of the model, you've saved 1 rupee, it would be worth millions of dollars because the fact that you can prove it to the model has reached the 1 rupee because it has been able to decipher the drivers of what has driven the customer behavior. That is why you're able to link it. Now, what the organization or the analytics team really needs to focus on was not building this model that anyone can do. Get hold of some good graduates from MIT and they'll code it for you instantly. What they need to do is take all these drivers, understand how these drivers have influenced, what products can I create so that I can leverage these drivers, how can I increase customer stickiness, get new customers. Part 1. This was the intellectual part. The more important part, and which is why I say it has to be top-down driven and integrated within the firm, because basis these drivers will come a whole set of action plannings for every department. For example, you may say, I increased 1 rupee because I figured out a particular customer in this area had a problem. So now you'll dig down. What was the issue in that area? Oh, it was some sort of problem which they had in that area. Probably I was a food delivery agent, and that area, the roads were bad. So that may mean certain actionables. So now, actually, just with this 1 rupee, what you have done, if you have been an effective analytics department or if you've driven it well, the entire organization, you have given the entire organization direction on what they have to work on. So to me, if they can do that, it's millions of dollars. It's not 50,000.
I think we were talking about this. This is a proof of concept, and once the proof of concept is established in the organization, you are done, and you can apply it to more and more areas and work with it.
Thank you. So just, the last lever of our discussion is, we have been talking about challenges, but compared to larger organizations, mid-sized organizations are also more agile. Mid-sized organizations do not also have a lot of legacy tech. So that also makes them very uniquely positioned to leverage analytics. And many of you have also worked in large organizations. So what do you think are some of the ways in which mid-sized companies are better equipped compared to a large organization to leapfrog into the next phase much faster than a large organization?
Loaded question. Your question had all the answers. Less of legacy, simpler things, less to lose, right? That itself is a big challenge. So in some sense, that's why you're better positioned. But I think the fact is this, right? I think if the biggest challenge is the ability to change behavior and not do rear view mirror driving and do forward driving, it's a bit of dreaming, right?
Right.
I think there's less at stake across the board for a mid-sized organization. Whether it's software, behavior, mindset, everything is less because you're doing, I don't want my son to live the same life I led, right? It'll be very boring, right? So the same principle is effectively, I think that's what is the edge for a mid-sized organization. They can dream, which a large organization can't.
That's a great word. They can dream. Ajay sir, what do you think?
If you have, worked or seen a traditional banking and financial services organization, you would see that, at the first level, the data entry is outsourced to an organization, which would be a CPA or a CA who would do the data entry, and it is the lowest value-adding activity which was there, and this is there in all the large organizations. And when we started, we said all the data has to be put in by relationship managers themselves. There is no outsourcing which will happen. And that has helped us today to maintain a set of data which is much, much better, and we can work and build models faster. So this is one of the things that has to change behaviorally, as Prakash was mentioning, and it has to go top down rather than bottom up, and we have to start treating data as if it is a resource and not done by some outsourced agency.